bringing us all those details. Meanwhile, in a surprising move, the government has slashed the price of natural gas marginally to $2.48 per unit. Remember, the expectation largely was that we could actually see a hike. Nitya Balakrishnan joins in to explain why there was a dip and not a hike. Hi, Nitya. Why is it so?
Absolutely, Ron. In fact, experts and analysts of the sector did indicate that we were likely to see an upward movement when you talk about natural gas prices, simply because we are looking at a price increase in the U.S. benchmark Henry Hub, which is one of the key factors in the domestic natural gas price formula when you compute it for the local market. But in a surprising move, we have seen a 0.8% reduction in gas prices, a revision downwards to about $2.48 per unit from the current 2.5. And remember, this will definitely not be good news for players like ONGC, Oil India, Reliance Industries and Cairns, especially at a time when these companies are seeking a flat floor price of about $4.2 per unit. So this comes as a rather drastic move when you talk about how it's going to impact the upstream sector. But in some relief, we are seeing the premium ceiling, which has been moved upwards by $5.56 per unit. That's currently at 5.3. So you're seeing a significant uptick on that front. That should bring some relief. But when you talk about domestic gas prices being cut, it's definitely not good news for the upstream sector. And a brown bit of sorts, because they were looking at a first time of a price hike in over 2.5 years. And we are seeing another downward revision. And that is something that we will see stocks reacting to come Monday when trade begins.
Nitya, thanks very much for joining us with those details. It's time now for another break, but coming up next, FY17 has been challenging for the economy. We bring you the report card when we return.